Would you like a share of the profits that the banks are making from you? By the end of this episode, you'll have more of an understanding about how credit card companies make money from interchange fees, interest fee hikes, and selling your information, and what you can do with this information that the banks don't tell you about. For handy personal finance tips, subscribe to my channel and hit the bell to be notified for our latest videos. I'm Dwayne, the finance strategist who has built an economic base from a grassroots level. My aim is to share my knowledge for you guys to prosper and build wealth. Going into how interchange fees work. It's the fee charged by your bank for transferring the money to the retailer's bank when you make a purchase with your credit card. This fee could be anywhere from 1 to 3% and is charged to the retailer. For example, if you buy a laptop for £1,000 with your credit card and the bank's interchange fee is 3%, the bank would have earned £30 for facilitating and processing that payment. £30. Wow. For doing that? Yes. The merchant that sold that laptop lost £30 off that item if their interchange fee was 3%. For every purchase with your credit card, your bank makes between 1 to 3% of the purchase price of that item or service. This income stream makes billions for the banks. This is why some business merchants only offer cash payments to avoid interchange fees, because this cuts right into their profits. Also, cashback credit cards play a big part in making the banks even more money. The interchange fee for processing cashback credit cards is set at a higher percentage rate. In turn, they make more money from the retailers and share those profits with you by way of credit card rewards and cashback. This is genius by the banks. The subtle psychological message that these credit card companies are sending is that you're earning money while you spend. This is an incentive for credit card cashback reward users to spend more on the card, in turn making the credit card companies even more money. This is genius. Well played. And all they need to do is break off some crumbs off that bread in the way of rewards. Genius. Right. Okay. So how can you use this knowledge? I would say by looking at it from a certain perspective. You're the customer that contributes to making billions for the bank. There's a bit of power in that. I would say you can potentially get what you negotiate. You can request for your payment date to be changed to suit your situation. If you're going to be late on a payment, you could notify them in advance and request for them to waiver the late payment fee. Do you understand the fees on your credit card statement? Put your answers in the comments below. Interest rate hikes. Credit card companies can hike up your interest rate as long as they give you 30 days written notice. You have 60 days from the notification of rate change to reject the proposal, especially if the lender didn't operate in accordance with the standards of lending practice. Credit card companies will write to you in advance about the interest rate change. This letter may be overlooked on many occasions. Reason being is that you may identify the sender of the letter, however, you may never get around to actually opening the letter. The credit card companies are profiting from consumer negligence by way of human behaviour. Knowing your consumer power, you can use this to your advantage and negotiate a lower interest rate. You could do this by sharing your personal situation with them. It could be unemployment, financial difficulties. You could request for a gesture of goodwill from the bank. If you've got a strong history of on-time payments and a good credit score, this can work to your advantage in lowering your interest rates. Selling your information. The banks have a very strong income stream that is data. Your data. Over the years, we've been exposed to data breaches and leaks and exposure of our personal information from giants such as Facebook, LinkedIn, eBay, WhatsApp, Equifax, the list goes on and on. With all this going on, the banks have recognised they're more of a trusted entity when it comes to consumer data and are capitalising on this trust. The banks can provide this data in a secured way without exposing information such as individual names and account numbers. Your credit card data is key to understanding consumer behavior because the banks empower transactional data with the processing networks such as Visa and MasterCard. This is worth billions as an income stream. As the saying goes, data is the new oil. So what's the solution for this then? I would say take charge of your data and sell the information that you're willing to reveal. This can be done through data brokers who bundle up consumer information such as web and buying history, age, gender, and income to improve targeting, and then they sell this to companies. So you might be wondering, how can I get in on the act? What part of this equation do I play? Data brokers have access to public information but are willing to pay more for personal information. That could be what you're speaking about online, when you're online, what you care about. So what's the easiest way to do this? I would say by plugging into apps such as Data Wallet, Data Coop, Panel app, Smart Panel, Fusion Cash. That will give you the opportunity to make a bit of money that is already being taken from you anyway. Now you know a bit more about how credit card companies make money from you. How about adding some more useful tips to your personal economy by downloading my free guide titled 10 Credit Card Tips for Your Back Pocket. It's in the description below. Check out my previous episode on my credit card series right here. If you enjoyed this episode, press that like button, comment and subscribe.